Okay, welcome back. So that mutual fund data is what we are focusing on. For the equity category, ex-ETFs, there's a sharp drop-off which has come through. Sunil Subramaniam is Managing Director and CEO at Sundaram Mutual Fund. He's joining us now. Sunil, good to have you with us here. Good afternoon. Put that in context for us, this drop we've seen in April.
No, see, I think the large cap has seen that pressure because I think the focus is shifting to domestic. And I think increasingly investors are allocating to the multi-cap category rather than the large cap category. That's what we see at our counters. So mid-cap funds, small-cap funds. I think the whole focus has been that it's the domestic economy which is going to lead the growth story of India. And hence, even the distribution fraternity, the advisors and the MFDs have been generally pushing the multi-caps or mid and small caps as a preferred alternative. I think that's the impact.
But the overall net equity category has seen a sharp drop. It was 20,000 crores. It's now 5,000 odd crores month on month.
Yeah, maybe you have to remove arbitrage from it because normally in equity arbitrage gets counted. So has that been removed? I haven't seen the micro details. So my suspicion is that if you take away the passives and the arbitrage, that wouldn't be the case.
Passives, this is ex-ETFs, arbitrage, I'll have to check.
It'll be interesting to see the SIP inflow as well. We're just waiting by for those details. But you're right, Sunil, in pointing out that the large cap fund inflow has come down to only around 53 crores for the month. Small cap inflows have been stable month on month, 2,182 compares to 2,430 crores month on month. And the mid cap fund inflow has also reduced a tad bit, 1,791 versus 2,130 odd. So the sharpest drop is in large caps. Do you think that that's probably going to be a trend that we're going to see going forward as well? There will be a formidable drop which comes into the large cap inflows because there's a shift towards small caps and broader market stocks?
I think so. And it's more to do with the domestic. So if you look at the composition of the large cap index, right, you have IT playing a big role there. So because of which, IT is obviously going through the challenges. The world is going to go through a slowdown. And it's pretty common knowledge now. So I think everybody is talking the same story that avoid international or reduce international related exposures, which are global cyclicals and metals, pharma and IT. These are the three, I would say, big. And the shift is towards domestics, where I think the banks and the consumer discretionary, those kind of spaces get the benefit. So naturally, when an advisor is advising his customer in terms of allocation, the large cap will tend to come down because IT gets reduced that way. So I see this as a big significant move. In fact, over quite a few months now, mid and small cap inflows have kind of dominated the large cap space. If you take away ETFs from large cap, and ETF flows come in because these are institutions and provident funds at play who generally choose passives, right? So I think that's the reason I see that, and I see this as a continuing trend to answer your question.
How's been inflows this month so far, Sunil? So far, equity schemes?
Pretty stable. So I don't see that. I think even the SIP book, we've seen that it should be strong. It should be stable at that. We're not seeing any reaction. In fact, it's a funny situation that inflows are coming, but I think if you see domestic mutual fund buying, that's kind of been negative. Whereas FIs have brought in 20,000 crores this month, domestic MFs have been selling. So I think they're generally been raising their cash because of the earnings season. They want to see where to deploy. So when the FIs come in and buy, it's largely large cap. They're selling those large caps down to the FIs and keeping slightly higher levels of cash and then redeploying them into the domestic oriented companies, whether it's large, mid or small. And this earnings season, they will see the trend. They will look at the report card on the actual earnings as well as the guidance that these companies give during the con call, and then fresh deployment will happen. And so that's, I think, it's also in sync.
Okay. Just a quick word on the total debt scheme inflow, which is coming at around 1 lakh crore versus around a 56,000 crore outflow the previous month.
This I would attribute to the bounce back in liquid segment because, typically March end and that the banks and a lot of the large institutions don't like to disclose a lot of mutual fund investments at the close end. And banks also chase them for deposits over the year end, to shore up the balance sheet. So generally, this is a March end phenomenon that the liquid sees a strong outflow in the month of March, and then it comes back in April. So I think that if you disaggregate the number, my thing is that it's going to be that which is actually going to come and show up that the liquid segment, that when I say liquid, it's just the liquid, whereas money market, overnight, ultra short term, all of these segments will see a sharp bounce back in April. typically it's a year-on-year same phenomenon.
Okay, all right. Sunil, we'll leave it there. Thank you very much for your time. Appreciate it very much. Thanks indeed.